everyone, thanks for checking in. This is Ryan with Stock Investing and Trading 101. Today is Friday after market, and the big headlines for today are that U.S. and China reached a substantial Phase 1 trade deal. So as everyone probably knows, there was trade talks today in the States, and apparently there was a deal made between Trump and President Yi. And they said it's a Phase 1 deal, and essentially what this deal pretty much includes is a lot of agriculture. There's also some of addressing some of the problems with IP theft that has been going on for quite a while now. And it seems pretty good overall, and there's going to be more to come, I guess, with a Phase 2 deal. But as this says, this is from Yahoo Finance, the U.S. and China agreed on the outlines of a partial trade deal, and they could sign as soon as next month. As part of the deal, China would significantly step up purchases of U.S. agriculture commodities. They agree to certain intellectual property measures, and there's also a deal with currency. So it says, and concessions related to financial services and currency, because many people know that the Chinese have been devaluing their currency, and we haven't really been devaluing our currency, so now there's some kind of currency deal. I'm not exactly sure what the exact deals are for the currency and the intellectual property. I'm not sure if that's going to be released or not, but in exchange, the U.S. is going to delay some tariff increases that were due next week, but there's also some levies that are scheduled in December that haven't yet been called off. But that's essentially the first part of the trade deal, and I'm actually pretty surprised that this came about. The deal seems actually pretty good for us. They're going to be buying more agriculture. The IP theft, which was probably one of the biggest issues that we were having, and also the currency agreement. So it says the agreement marks the breakthrough in the 18th-month trade war that has hurt both the economies of both nations. Importantly, Trump said that the deal was the first phase of a broader agreement, so apparently there's going to be more to come, but at least there was some kind of agreement instead of maybe trying to do it all at once. So I am a big fan of this, actually. So this should all be signed and finalized, I guess, within a month or so, but this is really good for the farmers, which I know a lot of people were saying that Trump kind of really shafted the farmers just with all these tariffs and everything. So now the farmers are going to, and a lot of the Chinese-related stocks like Caterpillar, Apple, and just some of these bigger names that have a lot of China presence and are more closely related to China's economy, this is going to be very good for them. Stocks like Caterpillar have been extremely beaten down, and these are extremely good stocks too. They just had situations that have really hurt them, but hopefully this will help these kind of stocks a lot. So looking at the Phase 2 agreement, the Trump administration also said issues related to Huawei Technologies aren't part of this deal. This is going to be a separate process, and I think this is one of China's big things that they want taken care of, is to obviously, this was blacklisted not too long ago, not allowed to be used in America. The Chinese, it's a telecom equipment maker. It was placed on an export blacklist in May, and issues with that are going to be discussed in the second phase of negotiations. So pretty much this deal being announced caused equities across the globe to rally, meaning the U.S. markets rallied, the Chinese markets rallied, more or less all markets rallied because we're two of the biggest economies, and now there's a trade truce, which was one of the things that was heavily weighing down the market. And so I'm a big fan of what's going on so far. I'm actually kind of surprised that this happened. I was expecting the markets to take a downturn this week, but I'm totally glad with an upturn. And it seems like a fair agreement so far. So this talks a little bit more about the tariffs and the exports, so it probably goes a little bit more into detail about the exact numbers. But I know for the agriculture, it says right here that farm goods over Chinese will scale its purchases of U.S. farm goods over 2 years to an annual total of $40 billion to $50 billion, which will help the farmers and the economy. Trump encouraged U.S. farmers to buy more land and more Deere and Company tractors. And this was a big part for America, too. This really helps us, and it helps the farmers who are really struggling. So that's really the basis of the trade deal for now, or at least what the public was told. So next, if you are still watching, I'm going to go over my portfolio because obviously, like I said, global equities markets rallied. So my portfolio did rally relatively nicely today. And also, one of the stocks that I made a video of not too long ago, probably 2 months, has gone up probably 10% or more since I've made the video. And the stock I'm talking about is actually Altria. So this stock looks like it may have potentially bottomed out. Altria had a lot of negativity around it with the vaporizing issues causing deaths across the certain states. And so with these deaths, they stopped the Juul vape cartridges, the flavored ones, from being sold, and it caused Altria's price to really tank down to 40 or less. And now, I don't know exactly what Altria closed at, but I know it's above probably $43, maybe $44. So we'll look at that quickly and go through my portfolio. So as many of you know, my stash portfolio is made of two separate individual portfolios. We have my taxable and also my retirement portfolio. And I just want to look at Altria's last price. So the last price is about $42.56, and I was saying, it would be a good buy around $40 or maybe a little bit less. So that may not be a full 10%, but it's definitely a nice gain. $3 on a $40 stock is a pretty nice gain. So looking at some of my biggest holdings, we're looking at Johnson & Johnson, which is 9% of my portfolio, which is up about 0.7%. Not a very great return, but I've been kind of buying the dip on this stock. There's been some lawsuits against J&J, and it's been severely beaten down from those lawsuits. I think it's a buy. This stock is a very highly regarded stock. It has good financials, and it's just been beaten down from a lot of their lawsuits. I think it's a good buy, and I'm going to continue to buy more. Next, my second holding is Altria at 8%, and I believe some of these have changed since the last video I've made, so the portfolio is a bit different than my last video, at least the holdings. So Altria, 8% of my portfolio, currently actually still down 1%. I've been buying pretty much the crap out of Altria lately. Every day I'm pretty much throwing $5 or $10 into Altria and just kind of letting it sit. I actually just collected a dividend. They just paid a dividend pretty recently. I got like $15 or something in dividends, but currently down about 1%. No big deal. I'm still going to be continuing to buy Altria. Next we have AbbVie at 7%. This is up about 0.8%. This is another stock that's been beaten down this year, and it's at a pretty low price. This is a dividend aristocrat, possibly a dividend king. I'm not exactly sure, but they pay a very nice, healthy dividend. And I'm currently up 0.8% on the position. Next we have Microsoft, which is one of my favorites. This one is 7% of my portfolio and up 12%. I believe Microsoft is a great stock to buy and a stock to own. It may be a little bit overvalued right now or overpriced, but I do think it still has a lot of significant room for upside. I was actually just seeing some things that this stock could have a much higher price target, maybe at I believe 140 or 160. I think a 160 is what an analyst said, and so it's still got significant room for upside according to some analysts, and they recently did some buybacks, and they also released a phone recently, so they got a lot going on. I'm a big fan of Microsoft, and I believe it's the biggest company in the S&P 500, so that just kind of shows you how big of a company this is. Next we have 3M. This is an industrial stock. This is 5% of my portfolio, currently down about 7%. This is something that has also been beaten down. If you see a pattern with some of my top holdings, that there's stocks that are beaten down and that are what I consider to be good valuations. But this stock is currently down about 6.5%. It's an industrial stock. It's down because the last couple of earnings have not been very good. The guidance has been cut, and just things aren't necessarily going perfect with this company. And this is something that I'm still continuing to buy, but I am a little bit scared about the future of 3M. I would, if things don't improve, I'm not completely sure what's going to happen with this, and for that reason, I'm not currently purchasing in very heavily to it. I'm much more comfortable buying something like Altria or Johnson & Johnson than I am for 3M right now. Next we have Apple, up 35%, an amazing return. 6% of my portfolio. I bought this pretty heavily when it went under 200. There was a lot of negativity I seen all over social media that, Apple was going to fail because the iPhone sales were failing and people weren't wanting to upgrade. But Apple's just got so much going for it. And one of the big issues that the company was facing was with all the issues in China. And now that that's resolved, I think Apple has significant room to go up. Next, we have Caterpillar. I talked about them a little bit before. They're struggling with the China tensions. Now that that's relieved, potentially there's more room for upside. It's also a great dividend-paying stock, and I'll continue to buy and hold this company. Next, we have Costco, Home Depot, PepsiCo, and McDonald's. These are all at 3% of my portfolio, and they're all up between about 3 and 6%. These are just all great companies. I'm sure everyone has heard of all these companies. Just great, solid, dividend-paying companies, diversified into different sectors, and just not too much to say about them. These are great dividend growth companies, and I really like all of them. Costco is actually a relatively new addition to my portfolio. I wasn't really invested in them before, but I like Costco. I think it's a good company to own. Next to the next few companies, we have Starbucks at 3%, Boeing at 3%, and then we have Kraft Heinz and Tesla at 2%. These companies, Kraft Heinz and Tesla, are currently down about 15%. These have had a rough year, to say the least, especially Kraft Heinz. And Starbucks and Boeing, both up, but a relatively minuscule amount. We have 0.12% on Starbucks and 0.9% on Boeing. So Boeing, they've had a lot of issues, and that's why the return is relatively low. Obviously, the airplane was grounded, not able to be used, causing Boeing a lot of issues. And Starbucks, my return, they do have a significant performance this year. I believe 50% return, 56% in the last 12 months. I just wasn't able to get in at a super great price, unfortunately. I was waiting for a dip, and it just kept going higher and higher. And it's a company that I want to be invested in, and I couldn't get a good price, and I wasn't patient enough to wait, so I started a position, still up on it, and it's still a good company. Next, we have AT&T, up 20%, just a telecom giant, great dividend, great company, and I own much more than this on different portfolios. We have Walt Disney, down 0.44%. This is 2% of my portfolio. Great company, lots of different, businesses that they're in. Coca-Cola up 9%, Walmart up 12%. I'm sure most of you have heard these names. Great dividend growth companies, great businesses. We have General Mills up 4%, Pfizer down 4%. So the pharmaceutical stocks such as Pfizer, AbbVie, and Johnson & Johnson somewhat have all struggled very heavy this year. I'm still a fan of them, and most of these companies pay very high dividends. And so I own a little bit of Pfizer is only 1% of my portfolio, but it's still a nice dividend. And the rest of the holdings here are only 1%. I'm not going to go through each and every 1% position in my portfolio, but I will scroll through them so you can check out my returns and the companies. Most of the companies that I'm in are, relatively either up or, just a little bit up. Sometimes they're a little bit down, but overall, I really only invested in solid companies. I've actually just repositioned this portfolio where I cut some of the companies that I didn't want out. I added some new companies, and I increased my position size on some of the other companies. So at this point in my portfolio, I'm really comfortable with all the stocks that I'm holding. There still maybe need to be some work done, but definitely comfortable with my holdings, and most of these are paying a dividend, which is great for my strategy. Obviously, I'm a dividend growth investor, and that's what I'm all about. So as we scroll through this, I'm going to show the dividends that I received lately, and we'll probably call the video at that. My retirement portfolio is more or less pretty much the exact same thing, very similar companies and position sizes. So looking at the activity from my personal portfolio, this is going to show some of my buys and some of my dividends. So a lot of $5 purchases into some of the stocks that I've been talking about. Lots of cash back or stock back. So when I use my debit card through this app, Stash, I get stock for free. Like it's like 1% back or part of a percent back. And yeah, so I like to take that to my advantage. And if you're interested in this, this is a free app. When you sign up, you get a free $5 to invest, and you can get the stock back on your card. But there is a $1 monthly fee, so I guess it's not necessarily completely free because there is a fee on it. So I just wanted to mention that. Altria has a $4.44 dividend received, so which is pretty good. I can buy another share of pretty much. I'll probably put it back into Altria, and then little dividends, but. That's just pretty much how I've been buying, is in slow pieces regularly, pretty much, at least every week or almost every day the market's open, I'm buying new things. And that's about it, guys. So overall, portfolio is up about $700. Pretty nice return, almost 10%. And still investing more as we go. So thanks for watching, everyone. If you haven't seen the trade deal news, or let me know how you think about the deal, or how